I'm Liliana Baez for AM Best TV in Mexico City. With me to discuss the state of Mexico's economy is Alfonso Novelo, Senior Director of Analytics. We're about 6 months in with the new president. From an insurer's perspective, what effect has his administration had on the industry so far?
Well, glad to be here. First of all, there's been a 1% impact in terms of the perspective of growth of the insurance sector. There's been a cancellation of the health insurance policy that the bureaucrats were hiring. We believe that there might be also some impact on the life insurance side. But aside from that, I mean, the greatest concern that we have is that the deceleration of the economy might have also an impact on the performance of the industry. What we see normally in the Mexican market is that it follows the economy, and given the adjustment on the projections for growth of the economy from a number of participants of the market, the central bank, the Ministry of Finance, investment banks, etc., we believe that that's also going to affect the performance on the top line of the insurance market.
AM Best has a stable outlook of Mexico's insurance industry. Is there anything that potentially could cause a reconsideration of that outlook?
Yeah, well, there are a number of things that could affect the performance. Of course, if, as I said earlier, if there's a slowdown of the economy, that's going to affect the growth of premiums most likely. Although, on the other hand, Mexico is still very the penetration of the insurance market in the economy is very low, so that's a huge growth opportunity for some companies or participants in the market. What I'm trying to say is that there is a lot of potential in segments that have not been exploited. On the other hand, there are areas that are a big concern for us. For example, the performance of the Mexican stock exchange has not been good in the first quarter of the year. There are also signs that well, on the other hand, we have higher interest rates, which could some sort of help the performance of the financial revenues of the industry. But yet, for those companies that have a higher percentage of equity or shares in their investment portfolios, it's definitely a red light and something that we should look into the future. On the other hand, the capital levels of the companies and the size of the surplus that they have above the regulatory minimum in terms of capital requirements, that's something that could help the companies sort of mitigate the impact from this volatility in the financial markets.
Thank you, Alfonso.
Thank you again. Glad to be here.
For AM Best TV, Liliana Baez.